You know, here's my biggest concern with what we just had. This weekly close came in and closed, pierced below this key support I've been watching for a long time, the 32.3 support from the January low weekly close. Take a sip of rum and clear my throat, sorry. So that signals that 32.3 is going to be resistance for a while. I mean, it could, you know, we could quickly retake it. The faster we retake it, you know, the less significant it is, but we now closed below it. We've made new support, so really, if you look at where we're at, the weekly close that we had is going to be resistance for now. Let me zoom in a whole lot on this last weekly close here. Where did we end up closing at? Right at 31.7. The problem is we're look like so far we're going to get continuation on downside. So this will only be significant support if this next candle is green. If the next candle is red, then that's from a weekly perspective is this going to be a level. It is going to be a valid level to keep an eye on. Probably throw a just to get the close of the last weekly on there as a light heath level to watch. But then it's also going to be the daily, of course, right? So that was a daily push right there. So that's going to be that same exact price. That daily close. So this was a little bit of a couple of daily red candles, 2 green daily candles, and then now we're going to see what happens from here. The problem is that we've confirmed 32.3 is resistance. So we may be confined to a little bit of a range here for closing prices for a little bit. Super boring stuff right now, honestly. Not a lot's happening. But the only problem is it's giving us more resistance levels to break through. So the odds are now increasing that we go ahead and do a liquidity purge to on these lower mid $20,000 levels. Now of that I'm not certain. Obviously another key level to watch is on our BLX chart. I'm putting it on the log chart here. This is from misconfig's work, right? So I fixed my fib levels. I had the fib level anchored at the wrong swing low level a while back. Yeah, I've been saying 26K for a very long time myself. I've been thinking that's probably a good level to watch for a liquidity low. So, but, you know, Year of the Bull, misconfig, he's got that right at 30,000 fib level. And that coincides pretty well with these wick lows over here in January. Sorry about that. My goodness. All right. I hope not. I'm ready for some excitement. I do see 28 to 30K as the key levels for the weekly. Can y'all hear my music? Oh wait, this is to open up with. If you can hear my current music, then we have a problem because I'm going to get dinged for a copyright. But hopefully y'all can't hear my current music. Somebody tells me to be patient on Twitter. I posted a whole bunch of stuff on Twitter I want to share with everybody too. MACD cross on the stock market, DXY breaking out. Yeah, let's take a look at the markets, the broad markets. I've been needing to look at that. DXY, yeah, this is the level I had right here to watch for a breakout to the upside. 92.1 was the main level. Here, on a very long term, I do want to bring your attention to this. I'm going to 3 days so we can see it. This is my trend lines. I don't know exactly why they're drawn like this, to be honest with you. This is my long-term trend lines. If I go to the daily, it probably will make more sense. I honestly don't know exactly why I drew the lines like I had them. But these are my trend lines from a while back. These have been here for a while. Let me get rid of this 50. So, you know, you have, depending on how you draw these trend lines, I suppose, we go to the weekly here real fast just to give it. You could draw this bottom trend line right about there too, huh? Those touches, that touch. Yeah, so we're going to come back into that as resistance at some point, but obviously that trend line is moving up, so it's a lot of room that this price can go up and bounce before it hits this long-term, multi-year trend line breakdown. Something doesn't seem right about this, though. I spent a lot of time on those last levels. I'm going to move them back for now. That's what I had before, because I spent a lot of time trying to work that out before. I think it's because I had a touch there, these touches here, and then a lot of price action right through there. So, yeah. The DXY though is breaking out above this 92.1 level that I had as resistance, now support. And then this downtrend, let's go to a 8 hour. So the DXY is breaking up a little bit. I've talked a lot about my inversion. You know, when the dollar is strong, Bitcoin tends to, it has less volatility, mostly to the upside. And when DXY is weak, that's when you see a lot of volatility to the upside. Oh, that's why. Thank you. I was on log chart. Oh, there you go. See it better now. Yeah, that touch, those touches. There you go. Thank you. It was log chart. Back to daily. Yeah, so those are my trend lines there. Still got some room to get back to that main bottom one. So it's anchored on that right there. Let me just draw this out. It's anchored on that. So, but we have this kind of W pattern, I guess, inverted. Some people call it cup and handle, I guess, they're looking at. I see more of just like a W double bottom pattern. If we break up to the upside, you know, there's a lot of potential upside. That could throw it all the way up above these trend lines here. So let's keep a close eye on the DXY. Equities, you know, I've been looking for about a 10% pullback on equities. You know, when you get a ramp like this, you get a 10%er. Once you, like, this is like the launch point right here, really. At some point, as you clear pretty well above this, you'll get a 10% pullback to get back partway to it. So let's see how far above it we are. It would take us a 22% sell-off. It's about perfect, right? So about a 10% here would make really good sense. Trap some people and then resume. And that puts you right on that. You see that level it put in right there? A 10% sell-off has put us right on this level. So the other level I had for some reason was 36, but I wouldn't. I'd be looking for that. This pullback right here, but a 10% pullback on the equities, you know, SPX mainly here. That would make sense to me. Let's look at NASDAQ. Have this ascending wedge, break out of this ascending wedge pattern. I wouldn't imagine the breakout has probably achieved its initial stated target, but let's see here. What's that impulse? That impulse from the bottom to the top is roughly 14%. So from the breakout, you know, you can maybe see up to a 14% move out of that. I don't think we're anywhere near that. Yeah. Didn't have to. It didn't have to put in like a flagpole. I mean, the flagpole would be much bigger if you're looking at an actual flag. But it's really just an ascending wedge, so it doesn't really have that same flagpole dynamic to it. But it did its job. It broke out. Now it's starting to curl over a little bit. It very well might just come back on the top of that, retest, and resume off of that. But the equities look like they do need probably a bit of a correction. Did I put this level on here because I was looking for a 10% on this too? Was it 10%? Yeah, it's a 14% from the top of that. A 10%. Maybe the NASDAQ gets a little bit more of a correction down to like 15, 14% maybe. Who knows? Who knows? There's a lot of money printing, so I don't look for these things to roll over too terribly much. Thanks. Do you have any opinion if equities correct this week, we could give actual boost rather than being negative for crypto? No, I don't think it would be a boost for crypto. In the short term, it wouldn't be, because when you have just a broad market sell-off, typically things sell off to get, you know, speculative things will sell off. So if NASDAQ's selling off, you're going to get... Bitcoin is kind of seen as a speculative tech asset still for the most part. And I guess it's an ancillary to finance too in some ways, but if you get a sell-off, broad market sell-off, you get a little bit of an initial response with crypto coming off with it. Now, to your point, funds might flow if there's some positive news for crypto finally. Then funds might flow from equities into crypto. You know, that rotation is a possibility, but you would need like an ETF or some other really positive news for Bitcoin. But if you were to get that, we could see a rotation of equities. But you'd probably have an initial sell-off together, and then what would happen is the crypto would bounce back stronger than equities, and that would be your signal that maybe there's some money rotating from equities into crypto. But you'll probably get a sell-off first, right, across the board. Yeah, at this point, I guess I was watching 31.5 here. I've got a bunch of other charts in Bitcoin I wanted to share with you guys. Let's see here. Let's go find them. I shared a couple of these on Twitter. All right. I don't know if y'all have ever measured from bear market low to bear market low before. That's something worth doing. I'm gonna put this on a log chart so we can see it a little better. I'm gonna put it on the weekly too. Make it easier to everybody to see in this little screen I've got here. So I always measure to these moves from the beginning of Bitcoin's existence, not from when it first started trading on Mt. Gox. So if you kind of do that, you can see this metronome of pattern that we've had of bull market, bear market, bull market, bear market. Now we've had very different lengths of these bear markets, and even the bull phases haven't been exact, but they've been pretty close. And it's been, from the inception of Bitcoin from over here to this bear market low was a lot shorter. The very inception of Bitcoin to this bear market low. But ever since then, the first low to the next low, and then this low to this low, and then potentially the low that we came from now back to the next low could very well be, fairly equidistant. We don't know yet. This is just hypothesis, right? Let me go with. I forgot my disclaimer, didn't I? And something else I want to say. So first of all, nothing that you hear here. I'm not a licensed financial advisor. Nothing you hear here is financial advice. And if you end up listening to anything and blindly taking trades on something that I talked about here, you're probably gonna lose all your money and end up living in a van down by the river. But the other thing too is in crypto Twitter, there's kind of a polarization, and within the community in general, there's some polarization, and so certain people, I'm one of them that probably feel pressure to be bullish all the time. I try not to let it get to me, but I get pressured to be kind of bullish. Now I am long-term bullish, and so I am myself have a bullish bias, but I don't want to let my bias ever have me make bad decisions or give But everything I say on here is just my opinion. That's the thing that I think is really important to keep in mind is I'm talking about things that I'm possibly seeing, but when it comes to placing real orders, putting money on the line, we all have to be very, very careful about how we're managing whenever we put money on the line, especially risk management. And so, anything that you see, I think we talk about, we have to be very cognizant that you're doing the proper risk management. You're doing the research yourself to make sure that you feel comfortable with what you're seeing and hearing, and that you agree with that thesis. And it can add to what you see or what you're going to do, but it shouldn't be the end all be all. But so this, I have it marked red right now because we've been in a bear market. Obviously, if we recover, if I made this line right here, I think basically I made it the distance of this bottom in 2011 to this bear market low in 2015. So that's about almost 1,400 days. So I went and stretched it out about that far. I could probably go out a little further. So say this market were about the same length as the prior markets, right? And we don't know that. I would expect, I've always been expecting about a potential 20% lengthening to each cycle. I know, there's other people out there that think there's a much longer lengthening, like 400 or 500% lengthening. I've never subscribed to that. They could end up being right. But if we end up getting pushed out to, say, December, and we do get a recovery here and push out to December, that's a really short time for the bear market. But it would, somewhat make sense if this was all got pushed, say, 20% or so. But as of right now, what we're looking at is, so far the peak has been there, and so far we've been acting fairly bearish on the charts. We have to be cognizant of that, have to respect it. That's the truth. So if, looking at it from this perspective, if we have peaked at 65,000 and we start to sell off, maybe a bear market low at the end of next summer maybe that lines up better than we anticipate. Maybe this timeline actually fits better than many anticipate. So it's a distinct possibility. I don't know this for certain. Again, this is a highly speculative opinion. It is very much just as likely, and this log chart makes these things do funny things. It's very much just as likely that this whole cycle, quote unquote, gets pushed out 20% longer. The other thing that's very likely is that the cycles just don't look anything like prior cycles. Well, there's not a definite bull market and a definite bear market. That the market dynamics, the supply-demand dynamics that cause these more defined bull and bear markets might simply take us, we might be moving into a model that looks more like this. Let me go back to this. You look at the history of NASDAQ. I've talked about this before. But it looks like it's just relentless buying with occasional corrections. It's not a prolonged bear market. It's a short correction with a series of just continuous uptrend. There is a time in that Bitcoin very well might start to look more like this, right? Where the average continues just to relentlessly go up with corrections along the way. Now this, of course, was also an abnormality in the correction because this was really a whole new asset class, being the internet being priced in. So, but you see since that 2000 spike and drop, it looks a lot more just constant ramp up with some corrections. So Bitcoin might take a very similar life cycle in its life cycle, right? These peaks that we saw here in this big drawdown, just think back to 2013 in Bitcoin and 2017 in Bitcoin, right? And this might be what 2021 looks like moving forward. So we don't know. I mean, I hope relentlessly up, but we just don't know. The bear market might not look like bear markets in the past if we are in one earlier than anybody anticipated. So that's the other kind of thing that I think that everybody needs to remember is that nothing says that this bull market has to look like prior bull markets, and nothing says that this bear market has to look like prior bear markets. So I'm going to take a look at comments here. I was going to look at another Bitcoin chart I was working on. Some more data. Same question, almost same time. What do you think about the interview with Elon and Jack Dorsey? Wonder if it'll have another negative effect. Elon, Jack meeting Wednesday could be some news. Yeah, we'll just have to see. We'll have to see what they say, see how the market reacts. Just be ready. Just be ready. And I'll tell you guys, I've been trimming this weekly close as I promised I would do. I said on Twitter that I was going to trim some of these longs. I had taken some 32.5 longs. I got stopped at break even when it failed to break out over here. And then I also, I said that I would sell a little bit more if we broke this weekly low here. So I've done that. I'm down to from 90% long Bitcoin to 70%, 75% probably. And I'm looking for any pops back up into this resistance to maybe trim a little bit more and get back down for some buy the dip funds myself. I'll share that with you. The meeting this week is another key data point that I'll have to see how the market reacts to that. Carefully see what's said, and then see more importantly, see the market reaction to whatever is said. And that'll give us a clue as to what's going to happen next. So, really, to be aggressive with trading, and mostly what I've sold for myself is moving trading accounts back to stable coins, or starting that rotation back to stable coins. This is my main line, right? The 120-day SMA. And I took a stab at trying to buy the bottom here. I still think we're putting in a bottom, so I'm really trying to free up some buy the dip funds. I'm going to take a stab at buying the yearly low, 28.5 for a double bottom. Possible resumption and then a quick stop if we get below that. But for me, I'm still waiting to get back above the 120-day. I'm also waiting. I'm not going to call the bear market until this happens, until we come up into the 120 and or this trend line, which are obviously very close together right now. I'll make this yellow. These are very close together right now. But I'm waiting for that relief rally. And I define the relief rally as we come back into the 120-day. And if we roll off the 120 and find it as resistance and confirm it as resistance on the downside, then I will say we are in the bear market, and I will begin my plan of shorting, assets that I was watching to short. So right now the 120-day SMA is coming in at 45,000. So if anybody asks me about are we in a bear market, for me, because we lost that level, that's my main level that I watch, so quickly and never came back up to test it. This is a lot of airspace. This feels like a shakeout to me, but I have to be realistic. The other level that we did try to come back up to and test is the 200. We did test it very briefly, found it as resistance. We came pretty close to it. So I have to respect that maybe the market is watching the 200, and the market may have discounted, has counted these two tests as the relief rally and a failure of the relief rally, right? The 120 is also about to cross the 200, which to me is a very strong signal of momentum in the other direction. So, we've got a lot of signals telling us the momentum is headed downward. So I don't know what that looks like. As far as what I think is going to happen, this is totally opinion. I do think that we're going to break down. I do think we're going to hit, I've got the levels here I'm watching. I think we're going to hit kind of unexpected by a lot of market participants, but not maybe, unexpected by all of us. We're going to hit one of these levels when everybody's looking for 19, 20,000. I think we'll have a hard bounce on one of these levels and then make our relief rally. And then off of that relief rally, we'll be able to tell if this was one big gargantuan shakeout based on how we react when we come back into these levels. If we find these as resistance and head back down, we have, this would obviously break prior bull markets in that we're gonna come back to the prior all-time high, which obviously in Bitcoin's history we've never done. If we come back to the prior all-time high, then we have to consider all these models, very invalid, and we're going to have to just take it day by day. But I do think that we go ahead and break the model, break that 618 fib, and get the last of the longs who are watching that level. It's becoming more and more of a thing people are talking about. Things like that. Are these levels that people are watching, $30,000? Break that psychology. And the reason I think that is you look at, if I were to let me go back to 2017 here real fast for you. I take a pattern from 2017. Let's grab that, slide it over. Okay. Take this pattern, and you see how price action played out in 2017. Should be pretty close right there. All right. That's pretty close right there. All right. Again, notice the way mathematics work and just the momentum, right? Notice that the momentum started slowly to build and then really accelerated upward. So any sell-off was bought up vigorously. Our market cycle had a very different dynamic to it. 2021, 2020. It started very strong, and then we rolled over. So again, the recovery might be a slow rollback. And you see this right here? We're going to probably have one of those to the downside. If this is a kind of a symmetrical recovery pattern, but you look at all the air gap space. If you were going to follow this as a blind model, has something called area under curve. You can measure how much area. And I contend that the market can only support, on a speculative asset like this, can only support so much price action for so long. And that's the area under curve it's able to support. Well, this was a lot of area under curve. So it might have taken a lot of the fervor for this whole market. Now, the reason it had so much area under curve, though, was money printing, asset inflation. You look at the broad markets again, NASDAQ, S&P. So this is going to look also abnormally big to compare to this. So we have to keep that in mind, that in reality, we should be comparing a chart that looks more like that. Because asset inflation, if you were to compare it cycle to cycle directly, that's more what how you should compare it. Maybe more like this. Right? And this looks a little bit, more familiar. But it's still, no matter how you slice it, this was a sweeping up action with a very pronounced top. This is a strong price action with a rollover. And so it's going to take time to regain that momentum. The other thing too is that the problem with this is if this were a top, the problem is you're not going to get those big pops. So a lot of people, including myself, and I've been thinking about this lately. I keep looking for this bounce, like this dead cat bounce, right? So like this 120 here. Notice we separated from the 120 massively in this blow off top. Very different look and feel to it. Dropped back below it, but came right back up to it. And then we lost the 200 and came back up to it and lost it. But this is just higher volatility. Very high volatility to the upside, very high volatility to the downside, and the bounces were high volatility. Our current market cycle, which on chain, I'm gonna reiterate, on chain this still looks like very much mid-cycle. This doesn't look like the end of the cycle. This is a very different looking price action. So it's very possible this has a metronome effect. And right here at the bottom of this metronome will be the equivalent of this. So that's what I'm looking for. That's why I freed up a little bit of funds. I'm going to try to, one more time buy the dip into here. I've added, so when we started the sell-off, I'll share this too, right? I was 80% out right here. 80% out. Just in general, all my crypto, basically moving my trading accounts and everything to stable coins, so forth and so on. I'm back 70%. If I continue to get my bearish signals here, I'll be down to 50%. I'll take a stab back up to 80% or so at buying these dips, and then I'll have to sell out. If we come into resistance and roll over, I'll have to take another small loss. But that's where I'm at right now. Take a look at comments. Hey, Brad. I hope this is all making sense to you guys. This is just how I'm seeing things, and I'm not going to be beholden to trying to play. For me personally, I'm not going to try to say that it looked like this last time, so this is how I'm going to trade it this time, right? That's not how I trade. I don't drag this over here and try to make this line up to that. I'll look at this and see this price action and see what I can learn from it. But I'm not going to be beholden to that myself. But yeah, that's if anybody's asking, again, am I short? A lot of people see these comments here. That's why I'm not short. The main reason is we haven't got the relief rally I'm looking for. And even with this slower roll of this price action, we didn't get as attached to the 120. The 120 is likely going to come back down enough that when we do get a smaller rally, it'll hit that 120. So no matter when it happens, at some point, Bitcoin will come back into that 120-day SMA, unless, all the governments around the world ban it and it goes to zero tomorrow. But at some point, it's going to come back into the 120. And that's going to tell me, and maybe even the 200, the 50 we'll watch as well. And that'll tell me what I need to know about where we're at in the cycle truly. And that'll allow me to make the call as to if we're in a bear market or if this is a prolonged shakeout. Currently, I'm still in this could be a prolonged shakeout just because we lost my key level so fast and have never even come back up into it. A lot of people got hurt this dip, especially people that didn't get positioned early. Like you mentioned, will take some time to repair and some of the chart. Good news to kick off start of the market. Yeah, you're right. So a lot of people joined us, and I have to be more cognizant of that. A lot of us built positions much lower, and so no matter what happens, we still, it would take a lot for us to get back to our cost basis, right? But a lot of people joined from, if you didn't even learn about Bitcoin or you thought it was a scam until January, you didn't have an opportunity to buy it until January. So, anybody who bought from here up is now down on Bitcoin, right? Anybody who joined basically in 2021 is now down. So there's a lot of people that are burned. Everybody that joined us in the last year or so, or a lot since 2021, got burned here as they bought these. And these price, you look right here, right here, right here. Those are all potential, price discovery breakouts, which you don't want to miss on Bitcoin. So I can also see how people who were just learning about Bitcoin, how they might have got positioned over here, very reasonably too, because we're in price discovery. You come back, You see this right here, it comes back pretty close to that level and resumes off. There's lots of valid reasons to buy. That's where risk management comes into play too, though. But nonetheless, hopefully everybody learned some lessons. But yeah, people did get hurt, and I'm sorry for that. I mean, I'm still, I admit, at one point I was doing very, very well, but trying to be patient and buy the dips and all that stuff down here is it's getting old. But we'll persevere. It's worth. The other thing too about trying to buy the bottoms like this is if you do it right and you're very patient and have good risk management, as long as you have tight stops and you know where you're wrong very quickly, and you don't over trade, it's worth trying to buy into some of the support down here, these dip buys. I said I've slowly built myself back up from 80% out to now I'm up to 75% back in. But again, I'll have to take a loss. I don't want to over trade myself, but I'll have to take a loss if we continue to roll over here. All right, take a look. Haven't heard much about Wyckoff lately, but still there, in my opinion. Never thought. Oh yeah, let's look at the Wyckoff thing. Hold on. I had, I did some work on the Wyckoff myself. Like, I'm not a Wyckoff expert. I don't know. Where's it at? Yep. Here's my opinion on where we were anyway. Note. I put all this on here. I thought this was STB. Hold on. I thought the spring still hadn't happened yet. That was when I did my analysis. I put this on Twitter a long time ago. Schematic 2 I was looking at. Hold on. Again, I'm not a Wyckoff expert. There's a lot of nuance to it that just following some blind chart is not really fair. I'm just going to pull up this chart. I don't know if this is the right one or not. All right. So selling climax, secondary test, and then the spring. So whatever. This isn't the one I was looking for. But when I put this together, I put this on Twitter. This was my attempt at figuring out where we were. I figured we hit PS here. The selling climax was here. We had a couple of STs and ST phase B, and then the creek is up here. So this is a trap. I considered this the trap, and then we had this ST secondary test in phase B, and I still think we're headed for a potential spring too. And I haven't even thought about that in a while, but thank you for bringing that up. Accumulation 2. I know it's schematic 2. Not distribution. Wyckoff. I thought it was 2, but maybe it's just 1. Yeah, it's just 1. Okay. There it is. Yeah, so I thought that, and you can have multiple secondary tests. I didn't have to look exactly like this, but this was the general concept, right? So you get that ST phase B, but the other thing was never got that trap back up to this area. So this is, I don't know. I don't know much about. I said I'm not a Wyckoff trader. I just kind of felt like the speed at which this one happened. I thought maybe this was not a proper Wyckoff spring. So that may be also what's ahead of us. And I guess in theory too, we could still be. We might have just crossed over to phase C. So I put this out there like when probably back late June. I haven't even looked at this in all of July. We've just been kind of sliding downwards here. It seems like you kind of slide downwards into that spring. So I guess maybe that's a valid. But I don't trade Wyckoff, so because I don't trade it, I don't use it for trading. I don't take any action on this. It's just interesting to watch. Do I average 3 trades a week, Jonathan? No, not right now. I don't. So I focus on crypto. I've got everything tied up in crypto. I don't really do too much forex, and the markets just haven't been really good. So my trading style is I probably take more like 5 trades a week when trading is really good, and I just don't trade when it's not good. So right now it's not trading environment. So I'm not really trading. All I'm doing is trying to position myself to buy the dip. So I have bought the dip. I moved some to offline. So I was telling you. So let me go find my little chart that shows, you know, my trading history here, and I'll just tell you. I'll just, you know, be honest with everybody where I'm at. So I'm pretty, you know, pretty long. I went back pretty heavy on the long side. Did we close that gap? Sorry, I was like, this is where I was mapping out some gaps. Where is my? Here we go. Here's all my trading history here. Whew, busy chart. So my initial entries were, I put what ended up being, this is my initial, I've never sold this. Let's be clear to everybody right now. I've never sold this. This is what I've held on to the entire time. So this, I will still continue to hold this until I know it's a parabolic top, right? So this initial entry right here is what I'm still holding to this day. This 40% entry is what I've been trading with. So this 60%, for lack of a, just for clarity, this went to cold storage offline, right? And it hasn't been touched. This went to exchanges and other things like exchanges like BlockFi and Celsius and stuff like that, and exchanges for trading. And then what you see, all these numbers here are all the trades I've taken in and out of this 40%, starting with 40%. Now, as we traded all this, obviously that 40% grew bigger than the old 60%. So this 40% is now 3 or 4 times that size. So I, you know, sold some coming into resistance here. The old all-time high, bought back at these 2 points. Sold a little bit here as we broke this uptrend on this bounce. Bought back here. Then I finally got into leverage. I meant to get into leverage way over here, but the problem was price took off way too fast, and I kept waiting for it to come back to 19,000 or 14,000. I kept waiting for it to come back to 19 or 14,000 to start my leverage trading, and it never did. It just took off too fast, so I didn't get to start leverage until we broke out of this pattern in January. This is my first leverage trading, 100% out of leverage trading and my alts right here. And so if y'all remember that night I was on, I got 100% out. I had big leverage trades on, and I had a bunch of alts leveraged. I got out of 100% of my alts, not my alt long-term hodl, but all my trades. Back in here, so forth and so on. So, though that leverage trading profit, this position has become much larger than this one. And so when I say I was 80% out here, it was actually this 40%, most of this, not even all of this, coming off in the form of getting to stable coins on exchanges. That 40% had grown into over 80% of my account. So when I say I was 80% out, I was 100% out of leverage trades, and how this worked out was, all right. How this worked out was I got out of leverage at when we lost the 50 right here. And then I got out of 80% of my spot, which again was all my exchange tradable, all my Bitcoin that was online. I got into spot here. I bought 20% back on this second dip right here. What might have been that first spring, or I guess the ST. So 32.5. I bought 20% back here. I sold 20% because we had this what I thought was that trap move, kind of sorta, and it was not a Wyckoff trap. There was other reasons. I put a tweet out as to why I sold that, because of how fast it broke out. It never retested. So when it broke this uptrend trend line, I sold a little bit. And then I bought back here, and then most recently, yeah, I think, and I got, yeah, so it's 20% out, so 30% plus 20% is 50, 60, 70, minus 10. I think I added another like 20% over here. Right, and so I'm just now rotating, so I should put on here that tonight, as of tonight, after taking stop losses at 32.5, and I'm probably another 15% out right now, and I'm working on getting a little bit more off on the side. So net right now, I'm like 75% long Bitcoin and crypto in general, but I'm also personally like 80-something% Bitcoin. And like 5% Cardano, 5% Ethereum, and a few other small ones. So that's where I'm at right now, right? So I'm starting to unwind right now, waiting for the next confirmation of resumption or a breakdown and buy back into some really low, you know, some mid-20 support. So this little bit that I've got offline here, again, it's for buying the dip. Because I'm still waiting for that relief rally. All right, how's everybody? Let's see what's going on here. Good morning, evening. Well, Taproot will definitely change things for the better for Bitcoin for the future. Yes, technology speaking, Taproot is a huge deal. Taproot allows for privacy transactions. The problem with Taproot, the only real issue with it, is it could open up Bitcoin to new regulations. So if you think about that, right now today, we can laugh at all the people saying that Bitcoin is used for criminals because really criminals shouldn't be using Bitcoin unless they're dumb, because they're just going to get caught, right? It's a publicly tradable ledger. It's the most traceable money in history. So it's really, really hard. It's really, really hard to get away with you know, when you're doing illicit activities, when doing transfers with Bitcoin. It's much easier to trace all that. Now, of course, there are ways to obfuscate it today, but when you can on-chain natively obfuscate it, that opens up Bitcoin to some new regulations that it wasn't really on the table before. But it does, on the other hand, it does enable some more intelligence around the ability to build smart contracts. Now, technically, it's possible now using external oracles, but so there's some enhancements for building smart contract functionality externally to Bitcoin on, you know, second layers, and then there's it also helps with the multi-signature capabilities. Help with Lightning channels. Able to open Lightning channels a lot more cost effectively because of the nature of how you can write the contract around that. We rich hits. How about on-chain metrics? Do you rely on them? They look bullish. Yes, Paul, I do. I do look at on-chain metrics. My problem with on-chain metrics is, as far as trading goes, so I would say I have two very distinct ways that I trade Bitcoin. I have my position trades, and then I have my swing trades. And so, for the most part, so, you know, again, going back to that chart that I was showing you guys, that this right here is a position trade. This 60% buy right here, this is me going in for a long-term position to hold Bitcoin. Really, I rotated a bunch of funds from Ethereum and some other just funds I had available. I put them in Bitcoin over here somewhere. But I guess I did buy some Ethereum. I don't remember exactly, but nonetheless, you get the idea. This is more a position trade, okay? So I'm going to hold this until, you know, for a long time, until I'm comfortable that, you know, we've really hit a solid, like, blow off top peak, and we're coming off of that, and then this will allow me to accumulate long term more. This 40%, you know, again, I kind of earmarked it more as for trading, and so I do have my long term position trade, which I use on chain for. So I use on chain to help me identify if I need to increase the ratio of my position to my swing tradable position, right? To my base trade position. So that's also what I do a lot of, is I'm looking at the market, all the market fundamentals, and I'm saying, okay, is my money best just sitting in Bitcoin as a position trade and me not actively trading the market? Or is this really good active trading time, and should I be actively trading and put more of my allocation towards swing trading and less of it toward position trading? So what I'm doing another thing too, it's a little bit more nuanced than what I show on this diagram. Really, all these numbers and all that stuff up here, this was because swing trading was good. Things were moving. We could get very clear signals, very high fidelity and high accuracy trade signals. And then we lost all that, right? When we lost our moving averages, we got below our moving averages. You can see the number of trades I've taken have drastically slowed down. And this is just a representative of, you know, the larger moves I made, right? I probably made a bunch of smaller moves all through here, but this is a general representation of larger moves. But you can see, nonetheless, trading slowed down drastically when we lost these levels because we lost certainty. And I would have been trading pretty actively had we come back into the 120, honestly, and rolled over. I would have said we're in a bear market, and you'd have seen activity like this on the short side. But because we didn't hit my criteria, we've just been in a, you know, this is not good swing trading territory for me, for my style. I don't like playing these range-bound markets. There are ways to take advantage of them, of course. to me it takes too much babysitting for the style of trader that I am. So you see that what I'm actually doing here is I'm actually rotating funds from stable coins into Bitcoin as a position trade. So these purchases were really meant for more position trade. So these are long-term. I'm buying these. So, some of these funds that I bought, this purchase here and this purchase here, a lot of those got moved over to cold wallets that are meant to be held for 3, 4, 5, 6 years, however long it takes, right? So these were just buy the dip position funds. Now, I would say this one right here was really that buy the dip position fund that probably went into cold storage. This one here was a stab at taking a bottom on a swing trade. And so what you see reflected here in me selling this is accepting that I'm wrong, that we didn't break out like I had hoped. And now I just got to get back on the sidelines and basically break even, right? I'm starting to trim break even. So I think, so honestly, so 10% of this and 10% of this went to cold storage for a total of an additional 20% in cold storage, roughly. And the rest of it's still on exchange, and I'm treating those as swing trades. So, but what I'm doing is, because trading is not good right now, but because on-chain is very strong, I'm rotating funds to a longer-term position trade. It's a very long-winded answer to your question. The other part of the answer is, it takes on-chain a lot more time than I can see on the charts. Like, I can see things happening on the charts that are much more short-term, and I can take advantage of those moves. With on-chain, sometimes you'll see things on-chain that take weeks or months to play out, and the chart can do something totally against what you're seeing on-chain for a period of time. And so with CTM trading methodologies and my own system, I can take advantage of those shorter-term moves as far as that kind of swing trading mentality. But on-chain to me is very position trade centric. So you have to watch those on-chain metrics, take your positions accordingly, and wait for the on-chain metrics to tell you that it's getting overheated and time to sell. And that's a very long-term position trade that it doesn't always get directly reflected in the charts. So, on-chain, by the way, again, on-chain was bullish through here. At the top, let's go back over here. I'll show you all this. On-chain looked bullish all through here. It didn't look bearish until right here. Yeah, on-chain started looking bearish right here, but, we were told to get the heck out of the trade by technicals, and we saw it coming. Between losing the 50-day, after dropping below it, the key indicator for me was to drop below it, came back up to it, couldn't definitively take it. When you lost it, getting clear signal that you're going down. That, and then obviously losing the 120, lost the 120, came back up and tested it a couple times and lost it. Those two signals, to me, they actually got ahead of on-chain. So on-chain was bullish, largely. We did see some funds rotate here, but this sell-off was a real big surprise because it was a, breakout to an all-time high, and on-chain was actually pretty bullish through here. I don't remember seeing a lot of, I didn't see red flags on-chain until over here. And the sell-off was in the middle of the sell-off. I started noticing all the coins coming into exchanges and a few other things. Our HODL was cooling off quite a bit all as the sell-off was happening. But it wasn't predictive, right? And so on-chain was exceedingly bullish through here. This was when on-chain was like crazy bullish, was this area right here. Then it was like, all right, something's about to happen because on-chain's gotten really like crazy bullish, coins coming off exchange really fast. And even through this break of the all-time high, it was still maintained pretty bullish. It maintained, on-chain continued to look bullish through here, but it was more neutral bullish and not like insanely bullish. Right now, we are starting to get glimpses of insanely bullish, kind of like this was. But we just don't know how the price action is going to play out. So that's trying to stay of, it's a long way of saying that I do watch on-chain closely, but I don't swing trade off of anything on-chain. So those are position trades. And so when I'm looking at charts, that's 90% of the time I'm thinking about swing trades when I'm looking at my charts. I leave, the on-chain is a fundamental metric to me, and I leave that for, but we can talk about some on-chain metrics too. Some good ones to look at. Rye says, also feel like price will go lower. Maryland went back into a state of emergency tonight. Other states may follow, and we could cause some panic selling. Are you serious? People go back into lockdown? Don't get me started. Nothing has fundamentally changed with the BTC network, the way it functions, and the reason it exists, and why it's an investable asset. Yeah, I agree, Brad. But, you know, something we got to keep in mind is that nothing had changed when it sold off at $3,700 either. Right? So there was nothing wrong with Bitcoin at $3,700. We are nearly 10x. You know, look at this. You have to be reasonable, and you're very true. You're very right. Nothing's changed. This is why you just keep hodling. But in a little over a year, we're still 600% up from that low. I only illustrate that, bring that out because, you know, we could be talking about in a year from now, we could be talking about this spike low being about like the equivalent. So if we do spike down here, the odds are this is some type of, you know, again, panic selling, capitulation, maybe also, you know, accentuated by a liquidity event. That, you know, it's kind of a mini liquidity event 2.0, some type of a broad market sell-off, and then a bounce. So you can get unexpected things happen. And Bitcoin, I mean, the case for Bitcoin hasn't changed in this whole time, really. It's gotten stronger. To your point, Brad, though, the reaction to this sell-off right here, I don't know where it was, right somewhere right in here. The Fed announced they were going to be printing, you know, taking the printer bazooka out and just going to town on it somewhere through here. That has changed. So, you know, we're never going to see that level again in all likelihood for many reasons, but just $3,500 on March 10th is not, that's like $10,000 today, right? I don't know if y'all have seen just like real inflation. I've been trying to buy some land, and it's insane. Real inflation is insane. It's absolutely bananas right now. Go to the grocery store, it's bananas. So yeah, real inflation's coming. So that's the other thing too, is Bitcoin's as strong as ever for sure. Let's take a look here. How about on-chain metrics? Volt says, to expand your equities comparison, do you think BTC is more resilient or less susceptible to FUD in the long term due to limited supply of BTC? Volt, the problem with Bitcoin, I would say I would like to think that it's less susceptible because of the limited, you know, it's a more limited asset and everything. The truth is it's more concentrated. I know, you know, I guess in the equities world, there are mega players that have very large, you know, holdings and things, but in the world of crypto, it is more concentrated than the world of equities. So it is easier for very large wallets to manipulate crypto than it is for large funds to manipulate equities. And that's just, I mean, it's just the truth. That's the reality of where it's at right now. Even Bitcoin. Now, Bitcoin's supposedly the most decentralized network, but until China kicked out all the miners, it was quite centralized. And then on top of that, the wallet holdings are still fairly centralized. So that's another risk that everybody has to keep in mind when you're trading any crypto, is that almost all crypto has a pretty large contingent of large wallets. You know, they're not a large contingent, but there's a large concentration in large wallets, and those large wallets can move the market in the short term a lot. So that's, you know, that's why Bitcoin is rife for this. If this is, you know, if this is like manipulation, which it doesn't really matter to me if it's manipulation or not personally, but if it is, the reason it can be done is it's very highly concentrated. Wow, thanks for sharing. I'm just starting the CTM training course and learning so much from you all in the community. No problem, Jonathan. I'm glad you're on here. Scats asked about a dozen times, are we rich yet? Or I keep seeing this comment. I don't know what. Oh no, I just missed this comments earlier. Elon Jack news. Honestly, can't see this meeting to be planned out to have a negative impact. Oh, the Elon Jack meeting. It's more likely than not going to be somewhat positive. But again, I think the market's reaction to it's going to be more telling than the meeting itself. So take the substance of the meeting. Take what you think, whether it was positive or negative or whatever. It might be clearly positive. Elon might just say, yeah, this is great. We're going to start accepting Bitcoin for payments and buy more Bitcoin or whatever, right? And it's clearly positive. But then see how the market reacts to it. Notice something. I know, just keep an eye on this. Like Doge is tanking pretty hard over here, right? And Elon has slowed down, I think, probably in pumping Doge. Where the heck is my Doge? This is the Bitcoin chart. It doesn't No, no. But Elon tweeted like his sunglasses with Doge or something, and it had this little bitty spike here. But his impact on this is becoming less and less and less. You talk about one with a really high concentration of large wallet. Doge is super high concentration of large wallets. If y'all remember too, I talked about Doge getting hacked. They're doing merge mining with Litecoin now. So from a core network perspective, that's not a big of a thing. But I would not be shocked at all to find out about Doge wallets or some type of hack related to that before too long. But I don't know that's going to happen, but I have a strong feeling that Doge is rife for some sort of and again, it might be just people getting phishing or something else related to Doge, but who knows. All right, it might not make the news because it's just a series of small things. What are the odds of 51% tax by China? Have we seen enough mining equipment leave China to rule this out? Oh, hey, yeah, somebody asked this last time. I've kept a loose eye on it. I've kept this a loose, eye on where mining has gone. I haven't seen enough evidence myself personally of miners showing up elsewhere to rule it out yet. I'll just say that. We did get a little bit of a bump in hash rate, but not significant. It's kind of flatlined over here. What are we at, about 100 exahash? So yeah, we're slowly making our way back over here. I haven't seen enough reports of it to completely rule out that China didn't do something and confiscate all the miners for an attack. It's highly unlikely. I just continue to say that it's very highly unlikely, but not impossible. I still can't rule it out as an impossibility. Again, I can rule it out as an impossibility myself when I see that, okay, yeah, there's clearly huge mining operations of miners that have left. And once we get clear signal that say roughly, I would say the number would have to be 20 to 30 exahash worth of mining that we know we have good evidence came from China, is now set up and running somewhere else. That would tip the scales to where it's not really possible. Now, again, China could also be force majeure taking chips, too, off the market. So they may have more mining power than what went offline even by now. So that's another possibility. All highly unlikely, but still possible. Technically. So I can't rule it out yet. I'll keep an eye on it, though. Thank you for asking. This is such boring price action, y'all. This is crazy. All right. Well, I think I'm going to wrap it up here. I appreciate everybody getting on. I probably had some more thoughts to share, but I think you guys get the idea. We're on the wrong side of no man's land. Let's just, in summary, I said that. I posted. Let me go back to my Twitter account here. I posted this, right? This meme. You can probably go find a bunch of mine. This is kind of the theme for tonight, right? Like, things aren't looking great. The charts do not look good. The charts look technically bearish. The reason I'm not more bearish is because we didn't hit my criteria. We never got a relief rally. And until we get that relief rally, I don't feel comfortable saying that this isn't some sort of large shakeout, right? I want to see what happens when we do get a rally, whether it fails quickly and rolls over, or that will tell me that, yeah, we're in the bear market. Or if we get a rally and we kind of consolidate under resistance and don't really roll over, just kind of when we break through, then I'll know that no, we're resuming, right? So that's what's holding me back from being too quick about it. But yeah, so we're on the wrong side. Closing below 31.2. I had this thesis too. I was on with Jordan, a couple weeks ago now when the sell-off happened. We did a video together. Talked about how I navigated basically this whole area up here. But what I did tell him, if you recall, is I said I didn't think we were going to get a sharp recovery. I thought it was because of the way it rolled over. I thought it was going to take a while to recover. And sure enough, we're still on that trajectory. What I thought would happen when I said on that was probably weakness. And this is probably in May we did that together, like late May. I said weakness through June. And then we would get some strength starting in July. And then get resumption in August. And maybe take out the prior all-time high at late August. early September, and then head for our blow off top September, October. That seemed like a distinct possibility to me. It still does. I mean, frankly, it still does. The problem is, what I didn't anticipate was this week of price action. I figured we'd be kind of bouncing, right? And it'd be weak price action, but we'd be fighting with some resistance levels all through here. We haven't ever really got a bounce, and we're not getting any good bounces out of this. And now we're below. We're on the wrong side. So we're on the wrong side of this consolidation. Now, being under this, having this confirmed as resistance now, 31.3, means it's going to take longer for the recovery, which also means that maybe the recovery starts kind of after a capitulation move down, back up, break that resistance, and then we take our, that's a distinct possibility as well. I think it's more likely that we break down one more time and get a mid-20s, hit, and then a strong bounce if we're going to get that bounce. And at some point we will. Again, the nature of the bear market, the bull market has looked a lot different, right? We had a very strong start, much stronger than last cycle, rollover, bigger than last cycle's shakeout. Our downside on this shakeout could be a lot bigger than people expect, and it's going to break a lot of people's will when we, lose historic levels like the 618, the fib level, and things like that, right? So, if you come back to the prior all-time high, that would rattle a lot of people's confidence for sure. That's never happened in a quote-unquote bull market. But to me, so far, we're still, we still very likely, could recover and head back up very, very quickly here. I just don't know what the catalyst is. There's got to be some kind of catalyst, so we're watching for it. All right, guys. Your Twitter link in your description isn't working. I've heard that before a couple times, and I've tested it. Let me put my Twitter account on the chat here. Tell me if this link works for you. And yeah, please be sure to follow me on Twitter if you're all on here, because my schedule doesn't allow me to go live or put out videos too very regular. But I'm able to at least keep my thoughts, updated with what I see is going on Twitter. So follow me on Twitter. And that's where you'll be able to get the most recent updates from me as I see things and just my observations. And now all this, again, this is my opinion. These are my observations. This is how I'm, maybe trying to navigate the markets. But please do your own research and just know this is my opinion. And, a lot of times I'll put things on Twitter and I'm not taking any sort of trading on it myself. I'm seeing something in the market. I'm like, that seems interesting. Somebody else might be brave enough to take that trade. This is just what I see. I see maybe the turning of a tide or something, and I may not be taking it. Like, for the most part, since this sell-off happened, since here, I'm going to share this with you. This whole time, since what day is this? May 14th, May, June, July. I guess that's going on. So 2 months now. I've probably made 4 trades in 2 months. All right, so I bought 32.5 over here, somewhere here, 32.5 right here. And I sold 10% of that on this sell-off right here. That's 2. I bought 32.5 in this bounce out of here. I like this bounce, so I bought 32.5 here. I also did try to buy on a break of some trend line somewhere. I don't even know what it was. Yeah, this false breakout right here. I got caught up in, took a small loss. That's 1, 2, 3, 4, and then the stop loss. And then I've just sold some here. So yeah, 5, roughly 5 sold some here. I've taken 5 trades in all this. I probably had 50 through here or more because I was trading altcoins. I've taken 5 in all of this. Oh, I did buy some Ethereum for a long term. I just sent it to offline. So the 6 trades. 6 trades in 2 months. So yeah, a lot of times I'll put stuff on Twitter. It's just my observations, what I see happening, but I very well may not be active in any of that, right? So again, yeah, probably 60 trades through here and 6 through here because it's just not been a good time to trade. All right, everybody, thanks for joining. That link works, no problem. I will try to update the video description. Do it right now before I forget about it. It's the same exact. I don't know why it doesn't work. Same exact link, but all right, there you go. Thanks, guys. Y'all take care. Let me throw on some Doge-wave. I don't like the Doge-wave coin, but I like the Doge-wave. I like the Doge dog. I think he's adorable. I love the dog. And I don't have a problem with people making money on Doge as long as they're making money, not getting wrecked. All right, take care, everybody.